Welcome to my channel and thanks for watching this video. Friends, in this video we are going to discuss about Mullen Automotive INC. Now the trend, or I would say the stock cannot hold its levels. That's the real phrase that is, I think, is right to talk about for Mullen Automotive. There is a simple reason behind this. Whenever the raw material cost of any sector or industry started moving up, it will put an inherent pressure not only on the stock but on the business as well. And we can see how the commodity prices are spiking across the globe, and this will definitely impact the global automotive industry. Okay, so there is a genuine threat as far as the increase in commodity price, and until and unless the price stabilized or started falling down, the levels which you can see in automotive companies are not going to stabilize. So with this context, let us analyze this chart. But before that, if you haven't yet subscribed my channel, just hit on the subscription button. Also hit on the notification bell along with the all button to get my updated video notification. So I have already told you the reason. Now with this context, if you are looking at this particular chart, you can see there are two very big and important levels which we have here, and they are 2.66 and 1.66, whereas 1.66 is going to be your stop loss on the downside. And please do not go below 1.66 or at last 1.6. So please do not go below 1.6, as this is going to be our strict stop loss. If you want, you can start trading above these two levels. Once it again hits back above 2.6, you can start your new journey from there, but not below 2.63, and more specifically below 1.6 on the downside. Now, as far as the upper end of the range is concerned, and this stock has been moving in a range for the last 8 to 10 years. So above 2.63 we have 3.28, we have 3.98, then we have 6.48, and I'm just telling you how the range looks like, nothing else. I'm not talking about this is the level which you are going to see moving forward. And the highest end of the range we have here is 16.77 and 21.92. So this is how the range looks like, and the stock has started falling again. That's why 1.6 is going to be your last resort, and we do not have any interest below 1.6 because we don't know how far or how low it can move. See, in a situation where it's not about a particular company or a stock, it's about an entire sector, and it is not specific to a particular country but across the globe, because commodities are globally traded financial instrument. So it will have an impact across the globe, and all the automotive and auto ancillaries company will face the heat because they are dependent on each other. But you need to see whether the correction is overdone. Either the correction will be overdone where the stock has lost most of its value, and there is nothing can go wrong. In that situation, you can invest for long term. Second, you need to understand the commodity cycle, because if everything is in the price, and then we will see a very smart recovery and the trend will slowly and gradually started changing. But right now, commodities have the upper hand, and if commodities move by 10, 20 or 30% further on the upside, there will be an immense pressure on because even automotive companies or auto ancillary companies, they will pass on the hike to the end consumers. So that's the entire chain that I'm talking about. So this is the end of the video. Thanks for watching.